Okay guys, trade review for the day. This is the first trade. It is a short in oil. So the fundamental reasons were outlined in the weekly overview video. That is my previous video. There's an obvious oversupply, and there was oil data that came out today that overshot its estimates for the amount of production for the week by a couple million barrels. That would cause an obvious bearish sentiment in the market, which would inspire major selling, considering that there's much less demand for oil. The panic around the coronavirus is going to continue to get worse according to multiple reliable sources. We will continue to see a reduction in travel. We will continue to see a reduction in economic activity overall, and that will not be good for the oil prices. Second to that, the issue with Saudi Aramco deciding to overproduce, Russia overproducing, all during this time of crisis, will flood the market with a supply of oil, specifically when there's no demand for it. Business school, one of the first things you learn, supply and demand, how that affects price. So that's pretty much an obvious trade. So I became bearish at around this level here. I'm still in this trade. This is the 30-minute chart, and my expectation is for it to get down to at least the previous lows where it gaps down, and for it to continue going much lower. I will be out of this trade if it begins to look like it's going to fill the gap. I have a level here, this level that I have my exit at right around this area here. I will be getting out of my trade at that area. So we'll see where that goes. One interesting thing, a bit of fundamental data to note, is that oil prices are no longer profitable for oil companies at such a low price. So we will definitely see some moves taking place in the entire oil industry. A lot of oil companies, shale companies, have not been profitable for some time. And selling oil at just about 32, well, anywhere between 35 and going down, it's really just not profitable. It costs them more money to produce the oil than they're making selling it at that price per barrel. So we will definitely see an interesting sequence of events happening here. But the coronavirus effects cannot be mitigated. Next trade. So I also went short on the Dow Jones Industrial Average, selling on US stocks. I would have been short at around this level. This was around when Steven Mnuchin, the US Treasury Secretary, was talking about the various stimulus packages he was going to offer to the economy. One was having larger tax cuts to businesses. Another would be helicopter money, basically, to everyone who stays home from work when they need to because of illness due to the coronavirus. And that should have been positive enough to inspire further confidence in the market if people were looking for those indicators. But the sentiment did not shift. So he was describing what he would do to support the market, and the markets did not agree that his efforts would have any effect on the overall economy to create investor confidence. So anyone who was buying the dip, well, this is not the bottom of the dip, basically. So many traders, including myself, were on the short side. I would expect oil to continue, not oil, stocks to continue to fall at least. Let's take a look at some levels here. You can see how far down we are. I would expect us to get all the way back down here. If you're looking at just technical levels, we've already, every time we've tried to do buying the dip based on areas of supply and demand, or even mean reversion where it will get back to maybe a moving average or something, those conditions have simply not been working. I don't think it's going to necessarily be a smooth fall. It will be a very volatile fall, but we are going to get a very significant fall because I do not believe that it's going to be financial measures that will help with this major world health issue. Alright, that'll be the trade recap of the day. Catch you all next time.